the Cowboys are not going to the playoffs, nor is the New Orleans Saints. So that's on film, so Mark knows that. So, I'll give you the clue. So you just made it.
Okay.
So at this time, I would like to present our presenter. We're gonna from the Hudson Group, Brian Hudson, who's going to talk about insurance. So please give him your undivided attention.
Good evening. How's everybody tonight? Good. So a couple of house cleaning issues first. Number one, I'm not a big PowerPoint person, so I don't invest a lot of time and effort in PowerPoint. So this is about the most boring PowerPoint you are ever likely to see. But it helps keep me on track. The second thing is, I have a lot of material to cover, so I'm going to try to go fast. If you have any questions of any kind, don't hesitate to stop me. We'll talk about it. And if I think it's going to go beyond the scope of this setting, I'll talk after the class. I'll be happy to stay here and answer any questions you guys might have. So my name is Brian Hudson. I do commercial property and casualty insurance for mid-sized owner-operated businesses. Pardon me. I've been in business for 23 years. I studied insurance and risk management at SMU, and I did not grow up wanting to be in insurance. I went to college late, and when I was going to college, I met my wife now. Her father was a retired lieutenant colonel in the U.S. Marines, and he did not want his daughter dating a bartender. So he had gone into insurance after he retired from the Marines, and he basically said, Monday morning you'll come to work for me, 8 o'clock be there. So, yes sir. But I was fired from every job I ever had, and I was tired of being fired. And so when I got into insurance and I saw it from the inside out, and I realized this is a business I can own, I can be as big or as small as I want to be, and all day, every day, I can go talk to business owners about business, then I said, that's for me. I loved it. Once I saw it from the inside out, it was a perfect career for me. It's been a great career. So I went on, I studied insurance and risk management at SMU, like I said. I have a CIC, which is a certified insurance counselor, which is a professional designation that's difficult to get. I've served with expert witness testimony in, many cases. And so now what I like to do is speak, because I like to recruit people into insurance, and I like to help business owners understand that insurance is not boring, it's not stupid, it's not a ripoff. The insurance companies are not just taking your money and not paying claims. If you do it right, it is the foundation of business. It's why business works in America today. Russ, the banker, is going to talk to you in a little bit. Bankers loan you money, but they cannot loan you money if the asset is not protected. We all know this. If you buy a car, you get a loan on the car, you have to have insurance on the car in case the car gets stolen or wrecked, because the car is the collateral that guarantees the loan. Well, finance, credit cannot happen unless the collateral is taken care of. And so that's the very simplest concept of risk. And if you're in business, the business itself is the goose that lays the golden egg. That's where the money comes from. And that's why we do business. We want the money, right? Anytime you're in business for any reason, anything you're doing, there's risk. Something that can happen that destroys the business. If you're going to own a business, you have to manage that risk. Sometimes you simply say, well, I'm just not going to do that thing. I'm not going to smelt lead because it's too dangerous. But some of your business, whatever you do, if you make pies or you teach music lessons, there's certain risk inherent in that. I don't want to build my business so that some crazy accident happens that I have no control over and it blows my business up and I'm bankrupt and the whole thing's gone. That'd be a bad day for me to talk to my employees. So insurance takes care of that, right? Hold on a second. Took the power off. Talked too long. There we go. So, disclaimer, this is one of my risk managements, right? The stuff I'm going to tell you tonight is basic general stuff. This is not comprehensive insurance knowledge that makes you an insurance expert. So, don't make giant decisions and say, well, Brian Hudson said this, because this is just an overview. So I have to say that. My lawyers say I have to say that. This is what I'm going to talk about tonight. Actually, I'm going to add a few things. Tonight is about the nuts and bolts of property and casualty insurance for business, okay? It's not the super exciting stuff. One thing I do say, I've done this for a long time, and so anytime I talk about a claim or a claim example, those examples come from my practice. right? These are claims that have happened to me or to my customers and that we've dealt with. So I don't make any stuff up anymore. I've done it a long time. And then how to buy insurance. There's several different ways. It sounds easy, but there are a couple different ways, and they have their advantages and disadvantages. The most common insurance policy for small business, chances are the type of business policy y'all are going to talk about is called a business owner's policy. We refer to it as a BOP, business owner's policy. It's called a package policy because it includes 2 lines of insurance. Typically, it covers property insurance and liability insurance. Okay? It's the simplest thing. BOPs are the simplest way to buy insurance. They're the simplest way to sell insurance, simplest way for your agent to do it. It's what the insurance companies want to sell because they can standardize them and automate them. And then they can just move them out quick. It has low pricing. You get a lot of coverage for a small amount of money. But what you don't get is flexibility. Okay? A BOP is a regulated product, so insurance companies are restricted in who they can sell them to, what they can include, what they can exclude. So a lot, when you just buy a BOP, the agent says, hey, we're going to put a BOP in play for you. What you get is what you get. And when you get the quote, it'll have 2 or 3 pages of stuff that you say, none of this applies to me. I have no idea why he's putting this on here. It's just on there. It's off-the-rack insurance, okay? And so you typically won't see the word BOP on the policy. It's an industry term or a business owner's policy. But more than likely, this is what you're going to deal with. And like I said, it's inexpensive and broad coverage, but it's not flexible. It's a highly regulated product. The way BOPs are priced depends a little bit on your industry. More often than not, they're priced on the value of the property that you're insuring. So let's say you have let's say this was my business and I rent this space. So I've got stuff in it, tables, chairs, computers. Maybe it adds up to $5,000. So my BOP policy is only going to be about $500 a year. It's going to be cheap, cheap, cheap. Maybe $300 a year. Those are kind of minimum premiums. If I had this whole building and all the contents in the building, my BOP would be a lot more. And chances are it would be based on the value of the contents itself, right? So the contents is what drives the premium. You can pick a deductible, but these are small policies. So you can't say, well, I'm going to take a giant deductible, $10,000 deductible, I'm going to save a lot of money, because there's just not enough premium in them to get big drops. So you're not going to get any premium break for taking a higher deductible. So your deductible is going to be somewhere between $250 and $1,000, right? The deductible only applies to property. So if your property gets stolen, or there's a fire or a tornado, and you have to have it replaced, you're going to pay your deductible, they pay above that. The deductible does not apply to liability insurance. So if you're in business and you get sued, it's a 0 deductible, right? Before you start taking deductibles on liability insurance, you tend to have higher risk or larger business. So the deductible only applies to property. Like we said, premiums term of package policy, same as the BOP. Still a package policy, has 2 lines of coverage, property and liability insurance, but it's very customizable. It can be sold to any business, small or large. You can put all kinds of coverage on it. You can take all kinds of coverage off of it. There's nothing that's on it by default, right? So if your business is larger, you're doing a couple of $1 million of revenue, maybe you own a few different locations, you're going to wind up on a package policy. Here's the trick. These are nothing more than industry terms. I'm going to know if you're on a package or a BOP, but you probably won't. Won't make any difference to you. The reason I pointed out, when we sell a BOP, almost every time we send the proposal, and the customer says, hey, this has all this coverage that we don't need. I don't want all this stuff. Okay? It's built on there. When I sell a package, I can tailor it exactly to what you need and want. And I can work with the premium a lot more. But you can wind up not having a little piece of insurance that might cover a loophole. And insurance companies love loopholes, right? They love loopholes. We work hard to not give them loopholes. So, package policy and BOP. Simple thing. Has 2 lines of coverage, usually property and liability. BOPs are cheap. You get a lot of coverage built in, but they're not flexible. Packages are very, very flexible and customizable and can go to any business. Okay? So you've heard me say about packages typically have property and liability insurance. These are the foundation, the cornerstone policies for business. Because almost every business owns some degree of property. This is the stuff that you own. Real property. Let's say I own this building, that's real property. Or I just rent space and I own the contents in the building, right? That stuff can be stolen, a fire can hit, tornado can hit, can be destroyed. Now, if I lose a desk, that's a nuisance, but I'm still in business. But if I own this building and an F5 tornado hits it and scrapes it to the ground, I can't take that loss. That destroys my business. So that's where I have to decide how I'm going to manage risk. Now, if I own the desk and I bought it with my money, I can choose to insure it or not. If I've talked to Russ and he's loaned me money to buy my contents, I don't get to make that choice. The truth of the matter is, I don't sell insurance, I provide insurance, because you have to have it. The bank, or your vendor, or your customer, or somebody's gonna say you have to have it. So, property insurance, first party insurance, protects the stuff you own. Real property, contents, the inventory, the big one, business interruption, okay? This is not a common term, but this protects your cash flow, okay? These protect your balance sheet. So if I own this building is an asset on my balance sheet. If it gets destroyed, insurance is gonna replace that asset. It's gonna put my balance sheet back where it was. But if I need this building for my business, and I can't just move somewhere else, say I'm a restaurant. While I'm out of business, while the building's being rebuilt, I still have bank loans to pay. I still have payroll for some people to pay. I got taxes to pay. Still have to pay my insurance premium. Then I got a car note. I got stuff I have to keep paying. So I need money coming in. This provides the money coming in while you're out of business. Business interruption insurance, mission critical. It's automatically included in box. It's not automatically included in packages or monoline product. So, mission critical. Unless you can go 9 months or 18 months with no revenue, then you don't need it. But if you can't, you need it. So property insurance is written on typically 3 different forms. I talk about this not because you need to know the difference between the forms, but you need to know the difference because this is how they affect premium, okay? And it's very simple. Basic form, broad form, special form, right? And it's pretty much as easy as it sounds. Basic is the cheapest, but the least amount of protection. It's called a named perils policy, which means these things right here, fire, lightning, explosion. If one of those things happens to your stuff, then it's covered. If anything happens that's not named, it's not covered. This is a small list of stuff, but this is a very inexpensive insurance policy. So people will call me a lot, and we'll give them a quote. In my office, we quote special by default. We won't quote anything else unless there's a special reason to. And they'll call me back and they'll say, Hudson, this other guy quoted, and he's $2,000 less than you. Well, let me look at that, because he's quoting basic, right? This is where insurance agents can mess with premium. So you need to know those words just so you know what you're buying, right? And if you just need fire insurance and the lowest price possible, it's great insurance. Basic form's terrific. But don't buy basic on price and then be surprised if your air conditioner gets stolen, they steal all your copper out of your building, and that's not covered, because theft is not covered. See, theft is not named here, okay? So basic form and broad form. Simple thing, this is the smallest number of named perils. It's the same thing, but they add a few named perils, they add theft, basically, the most important one. Special form. This is the best, but it's more expensive. Special form, they call it an all perils policy, but what it means, anything that happens to your stuff, that's covered, unless it's excluded. So there's no name. It says we'll cover anything that happens that isn't excluded. There's a list of exclusions like flood, always excluded, war, nuclear perils, intentional act. If you burn your own stuff up, you can't insure that. I know, right? The difference is, in basic form, you have to prove to the insurance company that what happened is covered. And if you can point to the policy and say, my stuff burned up, says fire right here, you've proven it's covered. On special form, they have to pay it unless they can prove it's excluded, right? So this gives you much better protection. There's no reason for y'all to know those details, but know those words, basic, broad, and special. Because if you get one...
I'm sorry, excuse me.
Yes.
Can you repeat that again?
About?
Back up just a little bit, you said.
About special
Yeah,
form?
yeah, say it again.
Right. So these two, basic and broad, are called named perils policy.
Okay.
These things are named. Fire, lightning, explosion, blah, blah, blah.
Okay.
Okay? If one of these things happens to your building, my building gets hit by a windstorm, I'm covered. If my building catches fire, I'm covered. If a herd of elephants gets in my building and destroys my building, well, I don't see elephants on here,
Okay,
so it's not covered,
okay.
okay?
What would-
Special form,
All perils are what I'm interested in.
all perils, right. All perils says everything is covered, no matter what it is, unless it's excluded. There's a list of exclusions. The exclusions are pretty standard. Flood is always excluded, you have to buy a flood separate. Intentional act, always excluded, you can't insure that. Governmental action, right? If they find out that you're using your building to manufacture and sell drugs, that's a criminal act,
Yeah.
they'll take your building. That's not insured, it's just a loss of your asset. So special says anything is covered unless it's excluded, right? Nuclear is excluded. So herd of elephants in your building destroys your building, elephants are not excluded, I guarantee it, I promise. Right? So you can turn that in the insurance company and they'll pay for the claim. Make sense?
Thank you.
Was there another question?
It was me.
I'm sorry.
Vandalism wouldn't cover the herd of elephants?
No. Vandalism is defined as an intentional malicious act. And animals cannot intentionally cause a malicious act.
So if someone came in my building and destroyed it, that's
Correct.
been covered?
Right,
Okay.
exactly right.
And if they use elephants to destroy it, that's covered.
If they
If they
maliciously
use-
destroy your building with elephants,
Right.
you got a case.
Okay.
That's exactly right. Then call me, because that would be, I want to read about that. That'd be awesome, right?
I'm gonna use this as an example.
Yeah,
I
yeah.
understand, like the deal they had out in Garland, way back, when
Tornado?
the houses moved in,
Mhm,
on something like that, even though it may not be on the policy, wouldn't the insurance company have to step in because they're homeowners? You know what I mean? And the insurance would cover it, but maybe don't have tornado insurance?
mhm. If you have basic form insurance on your homeowner's policy, that's personal lines, not business. It says windstorm, tornadoes and windstorm.
Okay, so it would be covered.
Right. If broad form, also covered. If special form, wind is not excluded on special form. Okay, I'm just telling you it isn't.
Yeah,
So if you have, it'd be covered. Unless
yeah.
you live on the coast. Because if you live on the coast, wind is excluded, and you have to buy wind coverage separately, right?
So it's a separate policy.
Separate policy,
Yeah.
but only if you live within 10 miles of the coast,
Yeah.
right? So here's the deal, right? This detailed stuff is mind numbing. You don't have to know that. I'm gonna give you a tip at the end of this. I've put all of this up here for you to know. Property insurance comes on 3 main forms: basic, broad, and special. They have different pricing. So if one agent gives you a much lower price, that's one of the ways they do it. Be aware of those words, okay? If you're looking for the most coverage, you're looking for special form. Simple as that, right? If you want detailed explanation, then you need an expert. So, co-insurance. I don't know if this is gonna affect you guys directly, but I always like to talk about it because I've been an expert witness in about 10 cases dealing with co-insurance, because people don't know what co-insurance is. No agent explains it. Most agents don't know what it is. And it's a little complex, so if I don't explain it well, we'll move past it, and I'll meet with you after the class and I'll explain it. Yes, sir.
I want to ask something for the class.
Absolutely.
Have you heard anything coming down the pipeline about possible earthquake insurance? Since
Yes.
the North
Yes,
Texas
yes,
has been
yes.
having a lot of earthquakes.
Big deal. That's a giant topic. Can I put that off?
Sure.
Here's the scoop. Earthquake is excluded on special form. Okay, earthquake is one of the exclusions. So if your building is damaged by earthquake, that's not covered. And until last year, who cared? In Texas,
Yeah.
earthquake. I had 22 years in business. I'd never ever sold an earthquake policy. Last year, I got about 100 phone calls.
Yeah.
Right? I had no idea how to sell earthquake insurance. I had to go learn. Here's the trick. It's really expensive, and it costs a lot. It's an expensive premium, and it has a high deductible, like $25,000. Right? Yeah. And it's a limited coverage, so it's weird. Everybody is familiar with it in California and Missouri, but in Texas, we're becoming aware. So right now, you don't have to buy earthquake insurance, okay? There's no rule in the banking that makes you do it. But the Corps of Engineers and FEMA are working, right now they're investigating to determine if North Texas is gonna become an earthquake zone. If it does, then you will have to carry earthquake insurance on any property that has a loan on it. Right? So this could become a big deal. Right now it isn't, but it could be. The other thing is, right now it's excluded, and so if you do own a building, like this building, and an earthquake hits and damages the building, that's not covered. Right? And so that's a bad day.
Yeah.
Yeah. And until recently, who cared? Earthquakes in Texas. Yeah. But now, it's big. So co-insurance, here's what's good. There's a couple of things you have to understand on this. If I own this building, I want to insure this building for replacement cost, okay? Which means, I'll talk about it later, but if it gets damaged, the insurance company is going to replace it with like, kind, and quality. They're going to pay the cost to replace it with new of like, kind, and quality. No depreciation, you're going to replace it, okay?
You use a big word. Explain that to us. What do you mean?
Which
Like
one?
cost and quality.
Like, cost, and quality.
Yeah, what is it?
They're going to replace it with similar stuff.
Gotcha.
You can't knock this building down and say, well, I want a Taj Mahal. That's higher quality.
Right.
And they can't come in and say, well, yes, your building fell down, so we're going to give you a tint. That's lower quality.
Okay, okay,
Like, kind, and quality,
okay,
right? Similar.
okay.
So the insurance company says, that's fine. If you want replacement cost, we'll give you replacement cost. But you have to agree that the limit you carry on your insurance policy and pay for will be enough to actually replace it, okay? Because if I own this building, I might say, well, it's sprinkler, it's steel and brick construction. The chance of the whole building being destroyed, nominal, really small. But the chance of having a fire, I mean, I could have a fire in here that could destroy a classroom. So I don't need $2 million for the whole building. I'm just gonna carry $50,000 of insurance. And then if I have a $50,000 claim, I'm gonna use that $50,000 wherever, right? And the insurance company says, no, King's X, right? So if you want replacement cost, you have to carry a limit suitable to replace it. If you don't, perfectly fine, coverage still applies, but they're only gonna pay for a loss on the ratio that you insured it, okay? And this is math, try to make it simple. If you own a building that costs $100,000 to replace, right? Small building. And you insure it for $50,000. So if you've insured 50% of the building, half, they're gonna pay half of any claim. So you have a fire in there, doesn't damage the whole building, only damages 50,000 of it, right? They're only gonna pay $25,000, right? Exactly. Well, every time I've sat in court, give an expert witness testimony, people give that look. So this is a misunderstanding. It's why I teach it in classes, because it's not a common thing, but business owners need to know it. If you don't own a building, probably not that big of a deal, right? Who cares? If you own a building, it's gonna be a bigger deal. And you want replacement cost on that building, co-insurance is gonna apply. Because what happens in my world, people call me up and say, hey, Hudson, I'm buying this building, it's $1 million. I'll say, okay, $1 million to replace it, we're good. And they say, well, I don't want to insure it for $1 million, I'm just taking a bank loan of $400,000. So I just want $400,000 of insurance. Okay, well, now we gotta talk. If you want $400,000, that's fine, we can do it. But you have to acknowledge that if you have a partial claim, they're only gonna pay for, a small percentage of the claim. Right? And it's my job to help my business owners make a good decision. I don't care what decision they make. You only want to insure 40% of the value. That's great, do it. It's your business, your money. I just want you to make an informed decision, right? So, I apologize too, I get short of breath. I've been sick recently, so I can't breathe very well. Usually I talk better than this. I love to talk. So, some of this stuff right here, did or should. Your co-insurance is gonna be a percentage. If you see it on your policy, it's either gonna be 80, 90, or 100%. What they're saying is, if what you did insure the building for is within 80% of what it would actually cost to replace it, then no co-insurance penalty. They'll pay all the loss, okay? Don't get too hung up on the math. You don't have to understand exactly how this works. I just like people to know that co-insurance exists. You're a business owner. If you buy a building, you can make a bad mistake insuring that building if you don't insure it to value. That's what we call it, insure to value. And we come across this a lot. Like I said, guy buys a building for $500,000, but for whatever reason, he's only borrowing $200,000, so he only has to carry $200,000 of insurance. And he calls me and he says, I only want $200,000 insurance. It's great. but you have to know about co-insurance. So when I teach classes, I make sure you're at least aware of the word, okay? You heard me talk about replacement cost value? This is another way they affect price, okay? This is a big deal. Replacement cost value is gonna pay to replace the damage with new of like kind and quality. I own this building, okay? Building gets hit by a tornado and it's gone. They're gonna pay to replace this building similar to the way it is right now. Like, kind, and quality. They can't give me less quality, I can't get more quality. Replace it like it is, replace it. But, if I carry actual cash value insurance, right? They're gonna do the same thing, less depreciation, right? So if I got a brand new building, who cares? No depreciation. But if I buy a 50-year-old building, right? That's fully depreciated. So now I carry $500,000 of insurance on it, and it gets hit by a tornado, and they come out and they say, we're gonna give you $75,000. Well, I'm gonna be upset about that, right? Exactly. So, once again, y'all don't have to know the details of the definition of ACV or RCV, but know they exist. Because A, an agent can lower your price a lot by giving you ACV and not telling you. And you'll think, wow, that's a great price. Or, if you have plenty of cash and you're making a good risk management decision, you can lower your insurance premium by taking ACV. Just know the decision you're making. That's what we teach. Know the decision you're making. General liability. This is my expertise. This is what I do, okay? Liability insurance is third-party insurance. The general liability policy, that's the word we use. We refer to it as a GL policy. Don't mistake that with your financial statement, like a general ledger. General liability. Protects you if you get sued for an accident you cause that damages a third party, another person. Bodily injury or property damage, okay? It's important y'all understand this. We get to the reason later. General liability insurance protects you if you cause an accident, results in bodily injury or property damage to a third party. Not to your employees, not to yourself. Those aren't third parties, those are first parties. Another person. I am not employed by the Juanita Craft Center. If I come in here and I fall down and I get hurt, I can sue the Juanita Craft Center and say, I hurt myself, permanent disability, blah, blah, blah. It's their general liability insurance that's gonna defend them. It's gonna pay their lawyers to defend them, and if I win, it's gonna pay the judgment or settlement. You're a business owner. I don't know what your businesses are, I'm sorry. But I think you make cutie pies, right? Pies? So if I come buy 5 of your pies and I take them home to my party and I'm serving my guests, and by the end of the party everybody's throwing up and 2 people die, I'm gonna sue you, right? That's food poisoning, that's products liability. It's included in general liability insurance. Premises liability, third party comes on your premises, comes into your store, falls down and gets hurt. Products liability, usually it's included. Some examples it isn't, but these are standard. So you sell a product, that product injures a person or causes damage, If I sell a space heater and it bursts into flames and burns a house down, then that's covered. Had those claims. Insured a company that manufactured space heaters, and they changed their parts vendor. They were buying them from China. They started buying them from Mexico, and they caused fire damage to 100 properties. 100. Not all of them went to the ground, but the policy went to limits, which means $1 million. Paid $1 million. It also includes personal and advertising injury. Not that big a deal. It doesn't come into play very much. It's uncommon claims, but they're becoming more common. These are defined terms. So personal injury and advertising injury basically includes libel and slander. Okay? So libel is if you write something down bad about somebody else. Slander is if you say it. Well, social media, right? So I go on your Yelp site and I say, the competition next door, their burgers are tainted. People get sick. They're horrible. They're awful, right? Well, they can sue me because I slandered their product. This is the policy that's going to defend me if that happens. Right? Exactly. So that's a risk. General liability is priced as a unit of either your sales, your payroll, or your area, but more often than not, it's either your gross revenue or your gross payroll. And so you estimate it for the coming year, right? So let's say that my general liability policy is effective January 1st. Well, I don't know how much revenue I'm gonna make in 2016. I can estimate it, and we say, okay, I'm gonna do $5 million in revenue this year. And they say, okay, your general liability is a factor of that, times 5 million, your premium is X. Okay, so I pay X premium through 2016. After that policy expires, they're gonna audit my actual sales. They're gonna come up and say, show us your tax record, show us your general ledger, show us proof. And it turns out I didn't have 5 million in sales, I had 4 million. They'll give me money back. I didn't have 5 million in sales, maybe I had 6 million. I owe them more money, right? So you estimate your sales, you pay your premium on that, they audit your sales, and they true up, okay? Except, I don't know how to say this exactly clearly, but it's something you should be aware of when you're shopping for insurance. There are two types of insurance companies, and one type does not audit down. So if you estimated 5 million and you only did 4 million, they just keep the money. They won't give you money back, okay? It's called a surplus lines insurance company. It's very, very standard, and actually the math works out, but it's complicated to explain. So when you're buying your general liability insurance, here's the trick. You can write this down. If you pay tax on it, then they're not going to audit down. They won't give you money back if you overestimated your sales. If you don't pay tax on the policy, then it will audit both down or up. Simple rule, okay? But we spend a lot of time explaining this to people, and then a lot of time a year later when they call us and they're mad because they owe more money. And I have to go back and say, remember I explained this to you? Because, I don't know, they don't write it down. But your premium is based on estimated sales or estimated payroll, and it's going to be audited, and you may owe more money. And then this is the big one. This is a big, big, big one. General liability insurance doesn't just pay if you lose. So if I get sued, and we go through the whole process, and the judge says, you win, Hudson, you didn't do anything wrong. Woo, I win. It cost me $200,000 at least to get there. So I gotta pay a lawyer, I gotta pay court costs. It costs a lot of money. The general liability policy pays 100% of your defense costs, and it doesn't reduce your limit. So if I have $1 million general liability policy, that million only pays the judgment or the settlement. It pays 100% of my defense costs without limit, right? So, my client made space heaters, switched his vendor to Mexico, burned down 100 properties. Actually, it was more than 100, it was like 104. His defense cost was about 10 times what they paid out in judgments or settlements. Because it was clear liability, right? They weren't trying to defend it, they were trying to settle. The insurance company was. But people lawyered up and they sued. It was a nasty suit. It was really nasty. Actually, it was tragic because some people died. But anyway, this is big. Lawyers charge the same amount to defend their innocent clients that they do their guilty clients. So people tell me all the time, I don't need GL insurance because we do this, this, and this to make sure our stuff is correct. Well, that's terrific. But if you get sued, you might be innocent. Your lawyer still charges you about $250 an hour to defend you, right? And if you get sued, that plaintiff attorney is working on contingency, which means those people are not paying him. He's gambling, and he just takes a percentage of the settlement. But your lawyer, to defend you, will say, well, I need a $25,000 retainer for you to take me on. So if you don't have insurance, you're bankrupt right off the bat. Whether you win or you don't get to win or lose. You're done. GL insurance pays for your defense. Big, big deal. Okay? Last slide on GL. Most common policies have $1 million per occurrence and a $2 million aggregate. Okay? So what that means is the policy is like a bucket with money in it. And it has $2 million total in the bucket. But you can only take out $1 million for any one thing that occurs. So, my client sells heaters. They burn 104 houses down and kills people. That was considered one occurrence because it was one similar event. So the insurance company reserved $1 million for that settlement. He still had $1 million to take care of the rest of his business that was going on, right? Because he stayed in business while this lawsuit was going on. He's still in business. He buys the stuff from China. Yeah, exactly. This is something as a business owner you should pay attention to, because it's very common that the aggregate number will be the same as the per occurrence number, and that's no big deal, who cares, unless you have a big claim. The weird thing happens and you got dead people, the insurance company will reserve the entire money and say, we think it's gonna cost this much money to get this claim settled, and then you don't have any insurance. So now all your customers and your vendors and your bank says, well, you've got to go get more insurance or you can't do business with us. Well, now you're in a pickle, right? Because now you're gonna go to an insurance company and say, hey, I need to buy more insurance. And they're gonna say, well, tell us about your loss history. Well, I have this $1 million claim working currently. And they're gonna say, we don't wanna play with you. We won't sell you insurance. That's a bad day. So you want your aggregate to be double your per occurrence, okay? It's a simple thing. Just make a note. You don't have to be an expert at it, but when you're buying your insurance, make sure the aggregate's higher than the per occurrence. Laura?
Question, when you're looking at the aggregate, is that for the life of the policy or
Yes.
per year?
Well, policy is a 1 year
Yeah,
policy.
so when you renew,
When you renew, you get a new policy. It has a new aggregate.
a new aggregate, so
Right.
that's like for the year,
Exactly.
okay.
Exactly. Aggregates came about because of liability. Liability. Because of asbestos. Before all the asbestos lawsuits, general liability policies didn't have aggregates on them, right? So, insurance company like St. Paul Reed, which is a giant insurance company, sells insurance to an asbestos manufacturer in the 70s. That asbestos manufacturer, and it's $1 million limit. That's $1 million per claimant, per occurrence, right? Every sick person that sued was a separate $1 million. Some of those guys were sued 100,000, 200,000 times, right? Nobody ever foresaw that. So now insurance companies put aggregates on them. So they basically put a ceiling on their risk. There's only so much money at risk. Doesn't apply to all asbestos and aggregates, but that's where it happens. But this is a big one. If you do business with a bank, if you rent office space, if you sign a contract with most customers, a lot of customers, vendors, depending on the business you're in, the government, more than likely, somebody is gonna say, to do business with us, you have to have liability insurance. Because if they are in business with you in any form, they can be sued also. That's called vicarious liability, right? So they wanna make sure, if I'm gonna do business with you, you have insurance. So that if we get sued, your insurance will pay for both of us, right? So it's very common. So when you're doing your business plan, you're gonna have to take care of liability insurance 99% of the time. Yeah?
Okay, so in that scenario, if the house burned down and somebody died, so if they sue you more than $1 million, so how's that work?
You're in for the other.
So you, as a business owner, we have to pay the difference?
Yes.
Oh.
You can buy higher limits. I'm gonna get to an umbrella policy later. And you can buy insurance up to $100 million, or if you're Exxon, you self-insure up to $500 billion. That's how much money they carry in their self-insured reserve insurance fund, $500 billion. Right? Well, I don't need $500 billion. I'm not Exxon. $1 million is the standard. Almost everybody says we want $1 million. It's becoming very, very, very common where they say they want $2 million per occurrence. We see that a lot. But anything that goes over $1 million, we don't increase the general liability policy, we put an umbrella policy over it, and we extend the limits with that. It's a cheaper way to do it, it's a better way to do it. And I'll get to that in a second. But as a business owner, your point is good. You have to pick the limit you want to insure. And that limit is just a number. You can do a ton of analysis on it, but you got to come up with a number. If you get sued for more than that number, you're bankrupt, unless you have the extra money. If you get sued for $1 million and $1,000, then you maybe have $1,000. But if you get sued for $10 million and you lose, unless you have $9 million laying around, you're bankrupt. You're done. Right? So it's a decision you have to make.
I guess my question is, how do you protect yourself as a company if you don't have that kind of coverage?
You can't. You're done. You're taking the risk yourself. So if you don't carry liability insurance, you are taking the risk yourself. Insurance is just a product that transfers the risk. Simple, right?
Yeah, I mean, we carry it, but I'm saying if it's more than what, you know, our
More than your
policy
limit.
state,
Uh-huh.
I mean, it just, we're screwed. I
That's
mean,
right. So you have to make a business decision. This is part of being a business owner, right? You gotta decide where are you gonna put your shop, what ingredients you're gonna use in your pies, who are you gonna market to? These are business decisions. And as a business owner, you have to decide how much risk you're comfortable taking and how much you can afford to take. Some point in time you say, I can afford $1 million. I can't afford $2 million. So I'm gonna buy $1 million, and if loss goes over $1 million, we're done. It's all I can afford to buy. It's just a simple business. Yellow.
Will the umbrella protect like your personal assets in that process so that you don't necessarily have to lose everything? You may lose the business, but they won't take my house or my car or any other assets that I have?
The answer is no.
No.
No. And so, actually, you bring up a point that we deal with a lot. I usually get into it later in the slides. Never make this mistake. Your personal insurance will not cover your business. And your business insurance will not cover your personal stuff. Right? So don't think, well, I have a homeowner's policy and it has liability insurance on it, so I'm good to go. You're not good to go. That homeowner's policy has a business exclusion in it. And if you incorporate or you form a partnership or anything else, a separate legal entity for the business, that legal entity is a separate human being in the eyes of the law. And so that personal policy won't take care of that legal entity.
What if you're doing business in your home?
Your homeowner's policy has a business exclusion in it and you're uninsured. Here's another thing too. There's no such thing as being self-insured. Well, there is, but most people aren't self-insured. You're either insured or you're uninsured, okay? But a lot of people say, oh, we just self-insure that. No, you are uninsured. You're not self-insured, right? Self-insured means you have a giant pile of money and you have a giant staff of people and they're working in actuarial calculations and they're reserving funds against anticipated losses. That's what insurance does. I know it's a bunch, but if you just say, well, we just don't buy insurance because we're self-insured. Nope, you are uninsured. That's different, right? So, general liability, typically $1 million per occurrence, has a separate aggregate limit. You want the aggregate to be higher than the per occurrence, okay? Very often you're gonna be required to carry general liability insurance. All right? You sell pies, if you sell them to a distributor that takes them to stores, that distributor is gonna say you have to have liability insurance. You're familiar with that, right? Yes.
I do have a question.
Yeah.
So, I guess I can just give an example. I have a lady that rents my kitchen,
Uh-huh.
and I told her that she's covered under my insurance policy because her license hang up there. Does she need her own insurance policy, or will she be covered because she's just,
Yes, no. Yes, she needs her own policy. No, she's not covered by yours.
because I figured because she was using my address and my name to do what she needs to do, that if anybody got sick, it'll fall back on my policy.
They're gonna sue you, and you're gonna be covered, right? And this is tricky, right? The way lawsuits work, okay? So, she's cooking in your kitchen, and I buy a pie from her. I don't buy it from you, I buy it from her. We'll say, I don't know, whatever the name of her company is. And I get sick. Well, I'm gonna sue her, because I bought the pie from her. I'm also gonna sue you, because you let her make the pie in your kitchen. You're negligent, you got me sick. What if my little daughter gets sick eating that pie, right? I'm gonna sue you. I'm gonna want money. Well, if she doesn't have any insurance, nobody's gonna pay for her defense. Remember, the lawsuit is gonna say, I sue you, and I sue you. Your insurance company is gonna pay for your lawyers. You're defended. They will not pay for her lawyers. She's on her own, right? So, she's just bankrupt. If she has no, in reality, the way it works, she has no assets, she has nothing for me to go get, we're gonna no-bill her from the lawsuit. Because why am I gonna sue her? There's nothing to get, right? But I'm gonna keep suing you. Your policy will defend you in that situation, okay? But it wouldn't defend her. So she is not covered. You are covered. Okay? Does that make sense?
I'm in trouble.
And that's another thing. Remember we're talking about risk management?
Yeah.
You have to have this liability policy to be in business. If you lose your liability insurance, your distributors won't distribute your pies, all your sales go away. Okay? So you need to protect that policy. So if you're going to let some person come into your kitchen and use your kitchen, and you have no control over her, you're not watching what she does, now she's not protecting you, but she's creating risk for you, right? So you're putting your business at risk. And everybody that you support your business with, your employees, your family, yourself, they're all at risk, assuming she doesn't cause a cholera outbreak. So,
That's huge, man.
I'm not in business
Yeah.
to tell my kids that we're broke because I let this lady use my kitchen. It's not why I'm in business. It's not nice, but
So how do you protect yourself against stuff like that? Get a bigger policy, just make sure, how do you?
well, she's protected. Remember, you're protected.
I'm protected, she needs her own policy.
She needs her own policy.
Anybody else that comes forward and.
If they come into your kitchen, use your kitchen. And you're gonna have to make a business decision on this stuff, right? Because most of those people are coming in, they're not gonna be able to afford the policy. So you're either gonna quit letting them do it, or you're just gonna accept that risk. It may just be built into your business, okay? Just a normal thing. But no, if their product causes damage and you get sued for it, your policy will defend you, but it won't defend them. And your policy may actually defend you and then sue them. It's called subrogation, right? Because they caused the damage. And then, doesn't matter how nice they are, it could be your grandmother, right? And you can say, well, I'm not gonna sue you. Well, you're not gonna sue her, but your insurance company will sue her. They're not nice.
And like car insurance, unless it's out of state, you don't have accident forgiveness, like, your insurance policy gonna go up, right?
Every insurance company offers accident forgiveness,
Oh, really?
100% of them.
Yeah.
Allstate just advertises it. We're so good because we offer accident forgiveness, fire insurance. They all offer accident forgiveness. And they charge for it.
Yeah.
So you come and you ask me for a quote, and I give you a quote that has accident forgiveness. And then you say, well, you know, Progressive, I quoted online, they're $100 less, I'm gonna buy theirs. Well, you didn't put accident forgiveness on there when you did it yourself, right? It's all on there. All the marketing, Progressive, Geico, all of them, they're all the same insurance companies, basically, right? So if they say, we have this or we have that, they all have that. It's just marketing. Should advertise. Okay, so on to commercial auto policy. We run into this a ton, particularly for small business owners. Basically, people are using their personal insurance, their personal auto in business. This is a little gray because that can be okay. If you have a private passenger auto or a pickup truck and you use it in your business, it's still covered. The personal auto policy covers fine, okay? And so if you just have a home-based business, incidental business use, stuff like that, your personal auto policy will work, but we don't recommend it. I never recommend it, okay? If you're gonna go into business, and like Laura said, you wanna protect your personal assets, your personal checking account, your house, your personal auto, you wanna protect it from the liability of the business, then you wanna incorporate, put a wall between the business and your stuff. And you do not want to open a door in that wall, right? So, let's say, well, my business, right? I am the Hudson Group, Inc. It's an incorporation, and as a law, it's a separate legal entity, separate from Brian Hudson. If I use my personal car that's titled to Brian Hudson on business, and I cause a wreck and kill people, they're gonna sue Brian Hudson, because that car's titled to me. They'll also sue the Hudson Group, Inc. because it's called vicarious liability and I was driving for the company, so both are liable. Both get sued. What I've done is exposed my personal assets by using a car that's titled to me personally, even though I had put a corporation in place, right? So if you're gonna mix and mingle personal assets, cars in your personal name, your business is in your personal lane, you know, you're working out of your house, it's in your personal lane, then don't incorporate. You're just wasting money. I can't give legal advice, so don't put that in place. But if you're taking risk management advice, don't waste money incorporating if you're just gonna mix and mingle personal assets and business assets.
Now, could your personal insurance, deny the claim or?
Yes,
They can?
yeah, they can.
I'm sorry, say that again, I didn't hear.
She asked if your personal auto insurance can deny a claim. So let's say that you're driving your car that is titled to you personally, and you have a personal auto policy in force on that car. And you're driving on business. You cause an accident and you kill some people. Bad accident. If it's a passenger car, just a regular four-door sedan or a pickup, it won't be denied, it'll be covered. But let's say it's a van, okay, you buy a cargo van specifically. And you put it on a personal auto policy, you say, well, I bought it in my name because I have credit and the business doesn't have credit. I've heard that. And then, I just added to my personal policy, because, you know, that's where I carry all my cars, on my personal policy. And then you kill somebody in a wreck, that's not gonna be covered, that'll be excluded. Because a van used for business is excluded on a personal auto policy. So, how many people in this room know all the details about the difference between a commercial auto policy and a personal auto policy?
I don't know a lot, but I'll give you an example. I put in the vehicle guard,
Uh-huh,
and I was gonna use my personal vehicle.
uh-huh,
Couldn't. I
uh-huh,
had to have commercial.
exactly, it's a commercial auto insurance.
In order to be able
Right,
to do that.
right.
I didn't know that,
Uh-huh.
and they actually wouldn't let me bid
You got
until I got
stung,
it.
right,
You know, and I got it, you know, I'm like,
Good.
okay, so now I got like 3 different types of, to cover myself,
right,
even though it's my own pickup, but I use it commercial. And I
Right.
have a separate policy for that,
it's
to
exactly,
cover me.
super
And
common.
Yeah,
So can he use his commercial policy, cause he was in his commercial truck on his way home,
Uh-huh.
something happened,
Uh-huh.
but he was off work.
Doesn't matter, the commercial policy covers the car, wherever it is in the world, anytime, day or night, no matter what it's doing. And so it can be rated for business and personal use.
So he doesn't really need a personal, auto policy.
Uh,
Cause it's hard to like, that's why I'm in this class, is because I'm trying to learn from, you know, just everything you can, because
Yes.
it's not, yeah, you don't have much of a business, but it's hard, speaking for myself, to know that I know I need the commercial, but I've been using my personal auto insurance
Right.
because I really can't do both.
yeah,
So are you required to have both? 'Cause it sounds
not
like you
required.
said commercial covers both of them.
A commercial can cover both, a personal can cover both. That's what I meant to say, this is gray. And if we start getting into the super details, the class get really confusing, right? It's highly, highly detailed specific. If you're using your personal car and it's a pickup truck or a private passenger car, and it's titled to you personally and you have a personal auto policy on it, that will be fine. It will cover, it won't exclude it. If you buy a van or a larger, vehicle over a certain gross vehicle weight, or a trailer, then it may not be covered, okay? The other risk you're taking, I don't know if your business is incorporated or as an LP or an LLC, then no big deal, you're fine. Use your personal auto policy, you're great, you're golden. You have a question?
So if it came down to getting a commercial auto policy, would it just be a matter of, say I have a cargo van and I originally bought it in my personal name, would I just, is there a way that I can just switch the title over into the business name?
Exactly. It's a really specific
And
question,
then-
but it's exactly, we do it all the time. Super, super common.
But is that easy to do, or is that like a long, arduous process?
Nope, super easy to do. 2 ways you can accomplish it. The best way, that it costs a lot of money, is you can sell the van to the business, right?
yeah.
Right? If you sell the van to the business, that's fine, but that's a taxable event. When you transfer the title, the county's gonna say, we sure would like $2,000 or $3,000, right? Exactly. The other way to do it is lease it, okay?
So
Now,
you would
lease
lease
it,
it to the business?
you write a lease, and you lease it to the business, it becomes an asset of the business. The business has an insurable interest in it, they can insure it on a commercial auto policy.
Is
Okay.
that door, remember when you said if you have a business that's incorporated, you don't want a door in the wall, does that close that door?
Yes, it
In
goes a
that
long way,
wall.
exactly,
Okay,
right.
okay.
What you're talking about though is super common and super easy. You want a lawyer to do the lease, right? Because literally what I'm telling you right now is legal advice. I'm not charging you for it, so it's just my opinion. But a lease is a legal document. But that is the way you solve the problem. You lease the car to yourself, to the business, and then the business insurance policy needs to be written correctly so that it covers both the business and you,
Okay.
okay? And that's very easy to do, but it has to be done, right? You see this wall right here? This wall's made of sheetrock, okay? There's nails in this wall, but you can't see them. The guy that did this, he put texture on it, textured over the walls, painted it, he's an expert at it. It is the easiest thing in the world to tape and bed and paint sheetrock. But if you don't do it, it looks like hell, right? It's terrible. What's the easiest thing in the world for me to do? What you talked about, we do it all the time. But if you don't do it, then you have a policy that's not correct, and you get sued, the business gets sued, but the policy doesn't pay for you, right? So detail specific, needs to be done correct.
One last question.
Sure.
Could your business be excluded off of your personal insurance?
Yes. So a personal auto policy has a clause in it that says, we insure you, you're named on the policy, so we cover you. we insure anybody that has vicarious liability arising out of your actions for this vehicle, which means if you're driving for a business, right, that business has liability, they are also insured on your personal auto policy. But there are exclusions that can apply, right? So it's detail specific, right? So it needs to be done with care. That's what it comes down to. I am a big fan when you go into business, particularly once the business gets rolling, gets traction, is starting to work, getting some revenue, and it's becoming an actual viable business. You need to incorporate or form an LLC or something to separate that business from yourself personally. And then you need to do extreme diligence to keep that separate, which is not common. It's not common at all. Most people use their personal cars, their personal tools, and they offset their house. They'll go rent a space, they'll sign the lease in their personal name, and they incorporate, and they'll sign a contract in corporation, but then that corporation doesn't, so then they'll sign something, they'll sign a contract person, and it's just all, so all you're doing then is all the money you spend on corporation and franchise tax, total waste. Because the only reason you incorporate is asset protection, right? You're just separating and protecting your personal assets. All this is just risk management for liability. Because in America, we live in a tort liability system, which means if you cause damage to someone else, you have to pay for that damage. Simplest concept in the world, right? When I was a kid, I broke a window, I had to pay my neighbors to fix the window, right? Pay for my damages. If I own a business, and that business damages someone else, I have to pay for those damages. But then lawyers get involved, and they do their job very, very well, and it becomes extreme, right? And they start suing me personally, they start suing my business, my customers, my landlord. And so the insurance is just a way to manage that risk so that a bad situation doesn't blow up my whole business. I'm sorry, I have to move forward. Commercial auto policy can also cover the car itself in case it gets wrecked or stolen, burns up, something like that. Hired non-owned coverage. This is very, very, very important. Let me see if I can use that. Yeah. So every business in the country needs hired non-owned auto insurance. Every business, no matter what. You need a commercial auto policy, and that commercial auto policy needs to include hired and non-owned auto coverage. Let me say that again. I'll read it, right? Because this is important. Every business in the country needs hired and non-owned auto coverage. What that means, if a car, any vehicle, is being operated for your business that is not owned by your business has liability for that car. So I have salespeople that work for me. And they drive their personal cars. I'll go to a different example. I had a client, they were working late, and he told an employee, go to the shop and get these parts. On your way back, stop at the hamburger place and get us a bunch of burgers because we're hungry. The kid's walking out the door, he says, hurry, we're hungry, we want to get this done. It was a drizzly, rainy night, slid the car through an intersection, hit another car, kid you not. 2 women, 4 kids, one of the kids holding a puppy. Right? All of them killed, including the puppy. It's horrible, 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 horrible. Actual claim, right? We dealt with this. So, kid was driving his own car, and he had insurance on the car, but minimum limits, like $25,000. And they sued the company, clearly. Turned out, the kid had a terrible driving record, and the owner of the company had hired him as a favor. He was like a kid of a friend.
Yeah.
I'll give you a job, you work in the shop, blah, blah, blah. And he didn't check his record, nothing, right? He put his business at risk. The insurance company paid $2 million because that was the limits. That didn't settle the claim. He went bankrupt. He's not in business anymore. He had $2 million, right? Just that fast. Go get us some hamburgers and parts. Hurry, we're hungry. 6 dead people and a dead dog. So it happens fast. He had hired non-owned auto insurance. He had non-owned auto liability. So his insurance company defended him. And his insurance company paid $2 million. That wasn't enough, and he still went bankrupt. But they paid everything he had been paid, and they defended him as long as they had money to defend him. So non-owned auto insurance is extremely important. Every business, you either drive your car for the business, or an employee drives their car, or you go out of town and you rent a car. Somewhere along the line, there's going to be a car operated for your business. Non-owned auto coverage is where you take care of that risk. Okay? So it's super, super important. I put this in here, it might be out of the scope of this. I own the Hudson Group, Inc., right? If I travel and rent a car, that contract says Hertz Rental Car rents this car to Brian Hudson. It doesn't say Hudson Group Inc. So now there's a contract that said the car was rented to me. So even though my company has non-owned auto insurance, it doesn't apply because the car was rented to me personally. All right? So in a very simple way, we solve that problem. We solve it all the time. I'm gonna feel renal kidney problems, I guess.
We good.
Yeah. That problem's easy to solve and very inexpensive to solve, but like a lot of things in insurance, it has to be done. It's detail specific, and the agent needs to know what he's doing, he needs to do it, because y'all aren't gonna know that. Thanks for the rest of the time, it's my bad, I apologize. But, there are a couple of things that are important I do wanna talk about. Executive management insurance, very important if you own your own business, but it's not common because it can be expensive. These policies typically start around $1,000 to $1,500 a year, they go up from there. But if you own, or you're an officer or a director of a company, then you have personal liability for your decisions managing that company. And so even though the company's incorporated and that corporation protects a lawsuit against you personally, for some things like breach of contract, intentional injury, things like that, they can sue you personally, right? If everybody remembers Enron, I'm older than a lot of y'all, so Enron, right? Well, they sued the heck out of those people that ran the company for blatant fraud. And Chubb, I knew the adjuster that did it, defended that claim. So directors and officers is what that's called. But breach of financial duty, breach of contract, commingling assets. These are financial damages, so it's like a professional liability, but this is for running the company. Professional liability is selling your services to your client. Directors and officers is for your executive decisions managing the company. As your company grows, I recommend you look into this insurance. When you're first starting, before a company gets traction, it's not good use of your money, but in the future, it is, as you move forward. This is a giant one, right? And this is new, and this has to do with computer hacking. And this is not cyber insurance. Sometimes I talk a lot about cyber insurance, but crime policy, okay? I'll get right to the point. In your personal bank account, Brian Hudson's bank account, if they hack into my laptop and they get my password, and they go into my personal checking account, they steal the money. The bank and the government protect that money, okay? And I'm only liable for up to a certain amount. Those laws do not apply to business checking accounts. So if they steal your password, and they hack into your business checking account on payroll day, or the day after you closed the deal and your client said, here's $10,000, and they steal that money is just gone. Just like it was stolen out of your wallet on the street, okay? Crime insurance protects you against that, okay? So talk to your agent about crime policy. That's a big one, and that's a new one. Before 2 years ago, I'd sold 5 crime policies my entire career. Now we recommend them to every single insured because that's a big risk. Talked earlier about flood. All property insurance excludes flood. If you're in a flood zone, you have to have flood if you have a bank, and flood is a little expensive if you're in a flood zone because you have a high probability that your building will flood. If you're not, flood insurance is inexpensive. But 80% of property that gets damaged by flood is not in a flood zone. So I point this out because every time there's a flood, people call us up and say, we need to turn in a claim, and we have to say you're not covered with flood insurance, and they're surprised by that. So I constantly pointed out, your regular property insurance, your homeowner's insurance, whatever, does not cover flood. So if you get damaged by flood, you need flood insurance. Talk to your agent about flood insurance. 3 different types of ways to buy insurance, 3 primary ways. Direct insurance companies, they sell direct to the end user. Geico, USAA, those are direct companies. The people that sell for Geico are employees of Geico, and they can only sell Geico. Geico is a very good insurance company. Terrific pricing, terrific coverage, terrific service. But if you call that guy, that's all he can sell is Geico. That's it, he's a direct company. Captive agents are like State Farm, Farmers, Allstate. It's an independent agent that sells their product, but they only have a contract with one company, and they're only allowed to sell that company, right? So a State Farm agent can only sell State Farm, or State Farm has some ancillary coverages. Ancillary companies they deal with. I'm an independent agent. Independent agents represent a lot of companies. This has more complexity. Sometimes it's hard to understand, but they can take care of it from a wide variety of companies. These have lower pricing typically, but they're limited in who they can deal with. If the State Farm doesn't sell insurance to your type of business, then that agent can't help you. So these 3 kinds of companies, I'm a personal fan of independent agents. This is one of my favorite things to talk about these days, particularly to business owners, right? The information is free. The internet is out there. Every single thing I know about insurance is available to you for free on the internet, right? You can go do it. Education is expensive. If you go to college, you go to this class, you spend your time, you spend money, you make your own choices. Somehow, you have to pay for that education, either in cash, time, or a loss. You make a decision that I'll buy my own auto insurance, and you don't know what non-owned auto insurance is, and then your employee spins out through an intersection and kills 6 people. That education is expensive. Experience is invaluable, right? So everything I've talked to you about, I've said a lot of times, it's details, it's specific, it has to be done. Somebody has to know to check those little details. You're in business making pies or lawn service or whatever. You're not in the insurance business. You need a partner that is in the insurance business. I'm not selling my services. I'm not the only good insurance agent out there. But do business with a good insurance agent. I give you this information so you have the basics to know how to do it. But you need to go to a professional that knows the specifics of how to do it so you can make the right choice. Information's free, education is expensive, experience is invaluable. Okay? Simple mistake, destroy your business. We've already gone over questions and I'm going way over time, so I apologize.
I'd like to bring up Mr. Russell Birch with Capital One. He's going to be presenting. Matter of fact, the test, we're going to go over the test in the next class, so please give me your test back, the quiz that I just passed out.
I got one right.
You know what? You know what? You know what? I'm gonna be Mark today. So it's either you got it right, or, you know, no. You know, buddy, I'm not gonna do it. They did pretty well. They always do well. They always do well. They always do well. They always do well. They are. I think we got rid of the bad ones. That was a good joke, huh? That was a real good joke. That's the way it is. That's a real good joke. So, yeah. So we will go over the quizzes the next class. So.
You guys ready for me?
Yeah. So,
All right. Thank you. So good evening. Good evening. So I gotta say, Brian, excellent, a ton of information. I'm going to talk about just a couple of things. There are 4 people you got to know as a business owner. You have to know your insurance guy, your CPA, your attorney, and your banker. So if he hasn't scared the crap out of you so far, my job is to scare you, because I got 472 slides to show you. So we should be out here well by 10, 11. Oh, no. I can do that too. I got to go, man. No. Anyway, so my name is Russ Birch. I'm with Capital One Bank. What I do, I'm the market sales executive for our virtual business banking team. It's a national team of bankers. We cover about 5,000 clients across the entire United States. I've been with the bank about 9.5 years. This is the second time I've actually taught this class for our Getting Out of Business seminar. So thank you for letting me come out and do this again, because this is fun. I love talking to people. I'm going to keep this pretty high level. I'm not going to talk about checking accounts. I'm not going to talk about all this stuff. I'm going to talk about the relationship with the bank. What that means, why it's important to you, and some things you should think about. And not to scare you, but some things in business that you will run across if you haven't already. But you need to be thinking about how to protect your business against fraud, how to protect your business against loss of cash flow, inefficiencies in just running your business. Those are just some basic things that you will run into as a business owner, because congratulations, you're a business owner. These things will happen. I've been in business banking now for a little over 10 years. Been a sales guy for 20 a lot. Owned a small business in the past, so seen a lot, done a lot of different things. So today is not about the great, wonderful virtues of Capital One Business Banking. Today is about why you should have a business banker. So why? That's a good first segue to the first slide. So why should you talk to a business banker? The main reason is they have expertise in what you do within business. They're familiar with the issues that you're going to run into day after day. You know, dealing with contracts, purchasing a property or purchasing equipment. A qualified banker, an experienced banker's done this before, and they can help provide you some advice and some expertise on how to help you out. You know, if you are starting up a company and you say, I'm gonna be a sole proprietor because it's inexpensive to do that, and so it'll be, you know, Russ Burge doing business as Russ Burge's stuff. Great, you're 100% personally liable for that. That's potentially a bad decision. It's not a horrible decision, not the wrong decision. Again, I'm not providing legal advice, but there are some risks that come with that. Your personal money and your business money. I want to make sure that your business money, the lifeblood of what you do each and every day, is protected and that you're getting the right advice. So talk to somebody who knows what the heck they're talking about. Somebody that has some experience saying, you know what, I've dealt with companies like yours. I've seen this before. Here's some things you need to think about. Not just, we sell the coolest checking accounts, boy, you gotta have one. Because I'm gonna shock you guys, this may shock you. A checking account will not revolutionize your business. It's not. It's a checking account. It's a way to pay bills. A credit card is not gonna revolutionize the way you do things. It is a tool to use to buy supplies and do those kind of things. It's a tool for cash flow. It doesn't change your business. I think we sell great stuff. But let's be honest, I work for a bank. A bank is a bank is a bank. We all sell the same stuff. We all sell vanilla. We sell really, really good vanilla, but other banks sell really good vanilla too. So when you're talking to bankers, when you're trying to find out who's gonna give me the right advice, talk to somebody and ask lots of questions. This is your business. You own it, own it. Ask great questions. How can you help me, Mr. Banker or Mrs. Banker? Because I want to know. Make sure your banker has knowledge of the common financial roadblocks businesses face. So that term, financial roadblocks, is mine, and I need to trademark that darn thing because I use it all the time. Because it's just weird enough and squishy enough for somebody to say, what the hell is a financial roadblock? A financial roadblock could be not having enough access to cash to run your business. It may not be enough cash to cover payroll this coming Friday. It could be you can't get to the bank on time, and so you overdraft your account because of just how it gets into the system. Those are financial roadblocks, and those are unique and specific to your business. For the most part, every business has some kind of financial roadblock. Years ago, I was doing a presentation. I asked probably the dumbest question I've ever asked. I was very, very cocky. I'm like, I know all the answers. I'm gonna surprise the audience. I said, every businessman I've ever met, they all have one thing in common. They all need extra money. They all need more money. So who needs more money? Everybody but one person raised their hand. And so I thought I'd be pretty cool. I'm like, what, you don't have enough money for your, you have enough money for your business? He goes, yep. Created a startup and sold it off for millions of dollars.
Okay.
He had enough money. He didn't need my advice. So ask good questions. But you're gonna have some financial roadblocks. That's okay. That's part of the fun and the excitement of running and growing a business. You're gonna have some growing pains. You're gonna have some issues. You're like, I don't know how the heck to deal with this. But be prepared for that time when cash is short. Be prepared when things are like, how do I get that next job? You know, I want to bid on that next job out there, but I can't because I haven't gotten paid for this job. And so you're just kind of leapfrogging over those jobs. How do you get those roadblocks out of your way? And make sure your business banker is skilled in providing you solutions that can help you achieve your goals and not just sell you stuff. This is probably one of the biggest things that really kind of pisses me off. And I'm going to talk real because it's late. It's been a long day. Since 4 o'clock in the morning. Bankers are salespeople. We want to sell you our stuff, our services, our solutions. But I'm doing you a disservice if I'm selling you something that you do not need. If you don't have a computer, I'm telling you, this is the greatest tool ever. This will move the slides and all that kind of stuff. But if you don't have a computer, this is a waste. A lot of bankers, some bankers may try to sell you solutions and services that benefit them and not benefit you. The way you can tell the difference is, are they asking questions about your goals? What does your business want to do in the next 6 months, in the next year? How did you get started in this? Why is this important to you? What are you trying to accomplish? Those are questions a good banker should ask because they need to fully understand your world and what's in it for you. Because we sell 1,000 different things. You may need one. And if I sell you 2, I'm not helping you. So make sure that they are skilled in providing the right kind of stuff. All right, So what should you look for? We are not all the same. How many of you have this is a dangerous question, I'm asking anyway, a slight distrust in banks? Can I ask why? I don't mean to put you on the spot, I'm just curious.
I don't even wanna really just say, but it has, yeah,
You've had a bad experience.
yes.
Put
So
it-
there's that.
Perfect, you've had a bad experience. You're not alone. A lot of people have, because they've either tried to sell you stuff that is incorrect, provided wrong information that's benefited them, maybe their pocketbook. Bankers are sometimes looked at just a little bit above used car salespeople. Maybe this, I had a little, there's sometimes not a whole lot of trust in what we do. Because they think, oh, you big bags, you're all this, we're just a company providing a service. Some companies are really good, some companies are not so great. So for you in running your business, understand that not all of us are the same. There's no, I'm gonna pick on you because you said something. You make pies, right? Your pie's not the same as everybody else's pies. So I can't judge yours based off of somebody else's that I've had. If theirs was lousy, doesn't mean yours is. Just because banker A was lousy doesn't mean we are, or that other bank, or there's a lot of really good banks out there. There's some key things you need to look for when choosing and selecting a bank, and I think all of you are clients of ours, thank you very much. But things you still need to ask of us and other bankers. Is that banker asking more questions than making statements? It's a huge giveaway. If you sit down with a banker and they start just telling you about all the wonderful, great things that their checking accounts and credit cards and all this stuff will do for you, if they haven't asked you one question, get up and walk out. They're not helping you. They're selling you stuff. A good banker asks questions. I want to understand you. I know what your business does, why you do it. Because in those questions and in the answers you provide, that provides the framework so I can provide the right solutions for your business to grow. Because my job is real simple. I say me, I'm lumping myself in as a business banker. I was for 7.5 years with Capital One. I now run a sales team. But my job as a business banker is really to do two things for you as a business owner. Help remove financial roadblocks, whatever that could be, cash flow inefficiency, whatever, and then try to help your business to grow. If I can do that, if I can help your business grow, I win at the end of the day. I don't win immediately, but I win at the end of the day. Because your business grows, you sell more stuff, you make more money, you put more money in my bank, you make more money on that. We win. Not immediate, but you win too. We only win when you win. That's what's important. Does your banker understand your business and your business goals? Do they understand what you do and why you do it? What's important to you? They don't ask those questions, again, you're in the wrong spot. And do they have experience to assist you? A banker that just gets out of college, it's their first job, may not have the experience you need as a business owner. Could be a perfectly good banker to handle some personal checking accounts, those kind of things, but as a business banker, may not be the right fit for you. Now, you don't need a banker that has 50 years of experience either. It's somebody who's kind of been around the block once or twice, and at least worked with business owners that can provide you some good advice. So talk about financial roadblocks. I can't read my own title. So common financial roadblocks a business can and will face. This is kind of the big stuff that I've run into over the years. So lack of adequate capital, which is just a really boring way of saying you don't have enough cash. It's going to happen. Other than the one guy I've met, there will come a time when you don't have enough cash to do whatever, to buy that inventory, to buy the insurance to get that job, to do that bid, to make payroll, to buy ingredients, whatever it is, there will come a time. Now, I just popped up just a couple of potential solutions for that. If you don't have adequate capital, some tools you could use from a bank would be a line of credit, which is basically a big sack of cash that you have access to. And you take out of it what you need at the time, and you pay it back over time. You pay interest only on the money that you borrow for that period of time until you pay it back. You just think of it as a big sack of cash. The other option is a business credit card. Sometimes people think credit cards are bad and evil and ugly. They can be if they're not managed real well, because they will just absolutely wreck you. But a credit card can be a great tool. It's basically the same thing as a line of credit. It's access to cash to buy that next job and that next thing. some situations won't allow you to use that credit card because you can't put payroll on the credit card. So I think you can pay for insurance premiums on a credit card. In fact, we do it all the time. So that's not a problem. So other roadblocks, banking inefficiencies. So just a quick question, what do you think some basic banking inefficiencies could be? How many of you love driving to the bank? Oh, go ahead, please.
Well, using the ATM, you use the ATM after hours and you deposit your money, and you can't deposit your money because the ATM is never working. So that's an inconvenience, like, that happens too many times.
It's an inconvenience, you're right. How long does it take to drive to a branch? Could be 5 minutes, could be 30 minutes. But there's a line, because you're gonna go to your lunch hour, right? Because you're busy running your business during the rest of the day. So how many other people drive, how many other businesses go to the bank during the lunch hour?
Everyone in there.
Everybody and their mother, yeah. And so, what's your time worth? You gotta think of, okay, I'm gonna get in my car, it's gonna take me 20 minutes to get to the bank, and I'm gonna sit in that line for 30 minutes, deposit my money, and it's not gonna be ready till the day after next. And it took me all told 2 hours. What's your time worth? If you make X amount of dollars per hour as a business owner, you gotta figure that into, that's a cost your business just spent. You didn't write a check for it, but you spent it. So that's an inefficiency. There are other ways to get your money in the bank. Easier, quicker, faster, potentially less expensive. Too much going to the bank, holding deposits. So have you ever gotten paid for a job and not gone to the bank that day? And it's sat for a day or two? Who is that helping? That money sitting in your desk, is that helping you? Ever lose a check? Anybody ever lost a check? Yeah? How fun is that? Oh man, I've had so many clients that have lost a check. It happens. They call whoever wrote them that check and say, "Hey Bob, I lost that check. Can you send me a new one?" Sure, I'll get on the next check run. Now they've already paid you, so they may not be very excited to write you another check. So guess what? It might take another 30 days.
Yeah.
So let's say it was a big job that you lost that check for. They're gonna pay for it. But they gotta do a stop payment on it. They gotta wait to make sure that doesn't come through and clear again. And they're gonna write you a check, because then it's 30, 45 days to get paid. What if it was a $30,000 check and you were hoping to make payroll? You just waited 60 days to get that money. Brian talked about a good thing, crime insurance. So one thing to think about, not to scare the heck out of you guys, but business check fraud. He talked about if somebody hacks into your account, steals your money, the bank isn't going to pay you back on that. And I just saw a couple people kind of look up like, wait a minute, the bank's got insurance. You heard of FDIC?
Yeah.
Guess what? That doesn't cover against fraud. That covers you if the bank goes out of business. It does not cover you against check fraud. So here's my scary statistic of the night, because I did promise I was going to scare you guys not nearly as much as Brian did. 62% of all businesses last year, 62% of every business in the United States was a target for check fraud last year. Of those that were actually affected, the average loss was $21,000 per occurrence. $21,000. So,
You scared me.
that's the whole point. You caught my point. So think of your cash is the lifeblood of what you do. It supports you, your family, your customers, your employees, all that stuff. I'm not saying run out and buy crime insurance, because there are some solutions the bank can help provide you that will 100% protect your cash. But you need to be thinking about that, and you need to have a banker that knows what the heck they're talking about. All right. Last thing is a financial roadblock here, poorly prepared tax returns. Hire a professional. How many of you have accounting degrees? How many of you are CPAs? How many of you do your own taxes?
How many fail takes?
So, I am not a CPA. I hire a professional. There are 4 people you have to have as your best buddies in business. Your attorney, your insurance guy, your CPA, and your banker. properly prepared tax returns, financials, are the lifeblood to getting cash. My quick thing on accounting, there are two ways that you can run your business from an accounting standpoint. You can write everything off, and you can show a loss in your business. It is a perfectly legal thing to do as long as the deductions are legal. There's nothing wrong with that. That is a tax strategy of running your business. Here's the catch. You can either not pay taxes or get a business loan, but you cannot do both. Because banks, for the most part, there's some that are not, but most banks are what we call cash flow lenders. That means we want to see the profit that your business has thrown off that says you can pay me back. You got to prove you can pay me back. That's what a tax return will do. I like you guys. I don't trust any of you. Just as you wouldn't trust me if you were giving me $10,000, you wouldn't trust me. I had to prove it.
Right.
So your tax return is the proof that you're paying me back. So again, you can have your tax returns show losses. I have lots of clients that have done that. They don't do any lending with me because they can't prove. Now I know they got the money. They can't prove it. I can't go to the head of the bank and say, well, they'll pay me back. You really? You showed a loss. So hire a professional in that regard. All right. So now what do? I've scared you a little bit. I've told you about a whole bunch of things. A couple key things you need to do. Build a relationship with a banker. Bankers are not scary. Bankers are not these boring types of people that just kind of sit behind this big, huge mahogany desk and say no all day. Build a relationship. Find somebody you like and work with them. Find somebody you know that you like and that actually has a clue and can help you and provide you good advice. Keep your banker up to speed with what's going on in your business. You got to communicate to us. The more I know about what you're doing and why you're doing it, the more I can help you going down the road. If you're telling me that you're gonna expand your business, you're gonna double by the end of the year, and you show me contracts, and you show me things, and you show me increases in your sales, when it comes time for a loan, I can use that information to take to our underwriting group and say, here's what's going on. That story, we love stories. Stories help. So communicate with your banker. Look for ways to network with your banker. Bankers know lots of business owners. Lots and lots and lots of business owners. So network. Ask good questions. Say, who can you introduce me to? I sell X. Do you have any other clients that buy that? Is there any way we can talk? Now, bankers cannot provide information. There's some privacy rights and that kind of stuff, but there are some things that we can do around that. Same thing is let your banker network with you. Because as business owners, you hang out with other business owners. We know that. I've known that for years. I want to know everybody you know. Now, I would love to bank everybody you know, but I have not earned that right. To do that, that's where the relationship comes into play. Works both ways. And I went through that pretty quick, and I got a minute and a half left. So the back third? No. So I'm going to just open it up here. Some basic, any questions? Banking questions, lending questions, Capital One questions. Are there any questions about banking? I thought you were going to yawn. I thought you're right. Banking's boring. Yeah, we dropped a lot of information. A lot of information.
We're absorbing so much knowledge. I'm just blown away.
It's hard to ask. I don't know what to ask because I don't know.
Yeah.
If I was going to run it, I wouldn't know what to ask because I don't know.
Just a general question that you said it used to be in business. What kind of business did you have, and why do you not have that business having the knowledge that you have about banks?
Excellent question. So I had a direct mail company. So I did very specific direct marketing and direct mail. Now, I sold those services to the company I worked for at the time. And I only marketed, so I had one client, which was the company I worked for. Did that for a couple of years and realized I like health insurance and my wife likes security and a constant paycheck and all that kind of stuff, and realized this is cool and fun, but I need that security for a wife and 3 kids. So I decided I'm going to focus on the career with a large organization versus doing that. Now the flip side of me, as my kids have gotten older, I got one in college, is my end state is to be a professional speaker, touring the country, writing books. Owning my own business. I ain't there yet. I got kids in college still. So you give up. I'm giving over the dream for them. So I'm okay with that. Did you have?
When you mentioned, it's that you can carry a loss every year, like by writing things off on your taxes. If you're, taking that strategy, but you still end up in the black, is that something that the bank would look at as a positive? Or when you say you need to show a profit,
Yes.
are you saying that it needs to be a substantial profit, or do you just need to be break even, or just not in the red?
So breaking even is not a profit. So I'm gonna take that very high level accounting question and boil it down, and that's an excellent question, that's a great question. So there are lots of things you can write off of here, and I'm also, my disclaimer, I'm not an attorney, I'm not a CPA, this is not legal financial advice. You can claim interest, so if you pay interest, you can write that off. If you have an asset that is depreciated, you can write that off. So that will take away from your net income, which is great. So those things are also called add backs. We will take that because those are non-cash events. We can add that back into your net income to show more net profit at the end of the year. So we will use a formula that says, okay, if you're buying this piece of machinery that costs $100,000 and you want to pay me back in 5 years. So we do all these crazy numbers, okay, you're gonna have to pay us this much every year. So I'm gonna take your tax return and say, okay, do you have at least, after it's all said and done, 1.25 times more than what that annual payment is? So, yeah, breaking even doesn't show a net profit, so it doesn't prove you can pay me back. So, that was a real roundabout kind of yes maybe. Showing a profit's always a good thing. Be proud to pay taxes. I know that may sound like a lousy thing to do, but paying taxes means you're successful. That's a good thing. So, anything else? Are we good?
Well, we're good, but I just wanted to kind of go back to a point that you made, Russ, when you talked about having a personal banker. You know, because in some of the other classes that we teach and we talk to our business owners, and, you know, often they're used to going through the drive-through or, you know, not really going into the branch, and just how important it is to kind of build that relationship, because when things happen, when you have a need, it's so much easier to pick up the telephone and talk to your banker about what's going on with your business. And I don't want anybody to leave here and take it lightly that, you know, when you're visiting your banks, hopefully you're gonna stick with Capital One, but if for whatever reason, you know, we're not the bank of choice because of location or whatever, I can't imagine that ever being a problem, but if for whatever reason, even with the bankers with us, ask them questions too. Then do pay attention to how they're engaging with you, because you wanna have that relationship. And it's true, you know, schedule lunches with them, maybe once a quarter, once a year, or something like that. You guys play catch up. You wanna know what kind of services are happening at the bank, because we're constantly adding new products and services, and sometimes we may not get it back to you as timely as we would like, because of course, we're working like you're working, you know, but you want to be able to say, hey, my business is growing, or I'm looking at this contract, you know, I want a position for this, because in 6 months, a year or so, this is coming down the pike. You know, you wanna have that relationship, and so when that deal comes through and you wanna apply for that loan and you have some, you know, you might have some losses or whatever, he understands your business, he understands your cash flow, he understands how your business is going, he can speak on your behalf. So, I just, you know, I know when we talk about banking, sometimes it's like, okay, what do I ask a banker, you know?
Yeah.
But it is
That's why I took all
about,
the product stuff out of my
Exactly.
presentation. Like,
yeah, cause you're right, to some of us are sales, you know, we're about selling, cross-selling so many products a day, and sometimes we hear you, but we're not listening, you know, so you wanna pay attention to make sure you're getting someone who's really listening to you and is really interested in your business. And don't take lightly, there's events that we're going to that you can get on the mailing list, you can come to the events, it's an opportunity for you to network and cross-sell, but that all comes when you have a relationship, you know, so don't be shy, you know, make it a point to go in, talk to your bankers, see how they're engaging with you, and if they're not the one, ask for somebody else or move on to somebody else, because it is your business and that's what you need to have. So I just wanted to kind of
excellent,
say that.
excellent. Oh, thank you very much.
I just want to say that to you and to yourself that helped, because, you know, you really just have someone to help you at your disposal, and it doesn't cost you anything. And before this class, I wouldn't have known that I would take them to lunch or just keep them aware of what's going on, I'm sorry, in your business so that, you can, get the help that you need.
Somebody steals your checkbook, starts stealing your money, you better know your banker, because they can help you. Yes?
One thing I wanted to point out, and it is piggybacking on what both you guys are saying, to have a personal banker, it is very important, even when you're dealing with the same branch. Because I've experienced that. We had a personal banker for one of our business, and even to go to a different branch was difficult with some of the transactions and business that we were trying to do. I had to say, stop, can you call your other location and ask for my banker? And they had to approve certain things that we were trying to do because there were larger sums of money and transactions and different things.
And they
that were-
didn't know you.
And they didn't know me.
Yeah.
So it was actually a blessing that we had that type of relationship that was built. And they were able to call her and say, yes, she can do that, because I know who that is. So you do have to have someone with a relationship, because if not, it would have slowed process down, and we were dealing with major contracts at the time that we were doing that.
Relationships are everything.
Yeah.
Absolutely everything.
So you have to, you gave us two.
And especially, your insurance guy too. Your insurance guy, your attorney, your CPA, you can have a relationship, because anybody sells insurance. I mean, there's 1,000 guys who sell insurance. And there's a lot that do it very, very well. But a good relationship with a partner, they'll steer you in the right direction.
Absolutely.
Any other questions?
Well, I just want to share with the class that Capital One, I just happened to go by Capital One, wonder why. And Leon, I was talking to him, he and I were just kind of chatting, and he said, we were talking about me losing checks or going back to the company, come out, could you possibly write me another check? I'm so sorry. And Leon gave me, which this is invaluable, I now have been signed up with an app where I can take a picture of my check
Promote
and
the
go
positive.
straight into that account. Y'all give me a back.
You know what?
That's new.
I had a moment like that recently because I was with my daughter and I had been carrying this check. And I work for the bank, guys. I mean, that's how bad it is. But I never go into the branches and I had been carrying this check around with me forever. And my daughter showed me how to, I have the app, so I do online banking. I check my accounts. I had never done the remote deposit. I am so sold on
Blown
that.
away. I love it.
Automatic. It goes into your account. And you never have to leave. Now, I'm not saying do that all the time, because you still want to come into the branch and see
Exactly.
us, you know?
Please.
But here's the difference. This is the bank right here.
That's right.
Yeah, that
That's right.
becomes.
If I'm your banker,
Right.
this is
And
the
the
bank.
bank. Exactly.